Hello friends, this is Rahul Magan here as Group Chief Executive Officer of Treasury Consulting PT Limited and also a venture capitalist. Today we are going to talk about something which is very important topic which is being recently discussed in number of newspapers, not in India, only in Singapore, US and Europe, which is the rise in alternatives. I know that many of the people, those who are watching this video themselves do not show that what is an alternative. I'm not talking about the dictionary meaning of alternative, which means that there is an alternate to it. Now I'm talking about the financial meaning of an alternative. Now what is happening that I hope you remember our earlier video when we shooted, I shooted with a batch. It was a conference which happening in the Southeast Asia Institutional Investor Conference 2018 that happened very nearby to our office, which is at West Hill. Now in this there was a discussion happened by one of the pension funds in Australia that the alternatives would surely be growing over the period of the time, and I'm not against that. Now first of all we need to appreciate that the asset composition is rising. The people, those who have the money, example, first of all let us try and understand those who have the money. First, if I take the order of importance, then the first people, those who have the money is the sovereign wealth funds. Example, Temesk here, we have Russian sovereign wealth fund, we have OPEC region which is full of oil and wealth, they have a sovereign wealth fund. So we have multiple sovereign wealth funds here across the globe, there is no doubt about that. If I go with the recent research which is there in the public domain provided by the banks, that they are running closer to $10 trillion of asset under management. $12 trillion of asset under management is not a small amount. Now what is happening that previously they used to invest a substantial amount of money in the conventional financial products. Example, equities, example, fixed income, example, very small percentage they used to invest in the commodities, very small percentage. But now what is happening that as these asset classes are turning volatile and also started giving negative returns. Example, you are a sovereign wealth fund in Singapore, Temesk, and you are investing in the Japanese security. Do you think that you will make up the money? No, you will never make up the money. You will lose the money because their interest rates are either zero or negative. Or if you are investing in a British security, you will make up money, you will never make up money. Now the question is that these so-called depository institutions, sovereign wealth fund, mutual fund, big insurance companies, reinsurance like ICICI, Prudential, reinsurance like Prudential, Ministry, they are now moving towards the alternative. Alternatives are rising. Now alternatives have different meaning for different people. So example, for a pension fund like CalPERS, amongst the largest pension fund we have in US and also across the globe. For CalPERS, the meaning of alternative is the stabilization in the return. Because ultimately what is happening, first of all, before moving what is an alternate all about, we need to understand, can I have the profile of the three kind of people, those who are using alternative. So we have three people, those who are using alternative. Number one, they are passive people. Passive people means they want a standard return, stable return. They're not worried. They are saying if I generate 4 and 5% or 6%, I am okay. As simple as that. I have no worries. Another is the active people like me, those who are using alternative to increase the quantity of the income or the dividend which they are generating. Example, today portfolio they are generating closer to 4 and 5%. And if they add alternative, the total return would end up to 7 to 8%. So your alpha and beta both will grow. Portfolio alpha and portfolio beta. Third kind of people are moderate people. Who all are the moderate people? Moderate people are the people, those who really, say 30% which they put in the active asset class, 70% they put in the passive asset class. So there is not much uses of alternative for them. Alternative is only for those people, those who are active. There are a lot of research reports we have in the public domain, although the text is very, very limited and most of the time the text is repetitive in nature, which is that what is an exact use of alternate. Sitting today, alternates are being used by sovereign wealth funds, they are used by the pension funds, they are used by the largest insurance or reinsurance companies like Prudential, like Ministry. Sometimes they are used by big banks also across the globe like Goldman and all. And last but not the least, they are used by big trust those who are having substantial amount of money and they wanted to make income. Now, historically speaking, they used to invest in equities, fixed income and others. This is how the composition go. Apparently, if I go with the research, they used to invest closer to 40-45 odd percent in equities, closer to 40 odd percent somewhere in your fixed income instrument, and closer to 20 odd percent in others. Others include commodities and very small amount of cash they used to hold actually. In fixed income, they used to invest in USD, United States Treasuries, UK bond, UK bills, Japanese bills, Swiss franc government, Singaporean government bonds, and hereby you basically need the AAA rating because this is not your money, this is somebody else's money. Now alternatives are rising. With the rise of an alternate, the avenues are going up, but avenues are not easy to select. There is a very good proverb which we have in alternative is that alternative requires a very good select which alternative. So the new alternatives which are coming nowadays is the commodities in which even traders, they feel fear to touch. LNG, CNG, 50 types of gases which we have across the globe. Hedge funds, infrastructure and infrastructure related funds, commodity linked derivative, equity linked derivative, gold linked derivatives, private equity, venture capitalist, seed funding and sometimes distressed funding also. And the list is pretty long. We cannot cover the entire list here in our video. Why we are investing in alternatives? Why a sovereign wealth fund who holds several $1 trillion of money of the government? Ultimately, who is the owner of sovereign wealth fund? Is the government. Because if any government, like first of all we need to understand very limited government across the globe is having sovereign wealth fund. Sovereign wealth fund is nothing but the net positive income of the country. So if you are earning 10 rupees and you are spending 6 rupees, 4 rupees is your saving, and that 4 rupee will you invest in any FD or term deposit or mutual fund. But what some countries do, like Singapore, Russia, OPEC and others, they create sovereign wealth fund. So they earn 10 rupees, they spend 6 rupees, the 4 rupees they will invest, they create an institution known as sovereign wealth fund. Who will manage this 4 rupees, grew it to 4.1, 4.2 and all. And China is the leading example of that, CIC, Chinese Investment Corporation. Chinese Investment Corporation was the first sovereign wealth fund we had in Asia. And they led the way to the majority of the government that yes, sovereign wealth fund can be created. That is a different thing that countries like India, we are too busy in discussing too many things, but we never busy in discussing that why from the last 60, 70 odd years, we do not have any sovereign wealth fund. Now coming back to the topic, alternatives is having their risk and maturity profile. Example, hedge funds. If you invest your money with the hedge funds, the risk is pretty high. It's go, it's survive or go. That's it. There is no other thing. If you invest in private equity, the gestation period is very high. You are investing in a company, so you have a lot of private equity companies. I don't want you to name them. You invest either few of the private top 5-6 private equity companies, Sequoia Capital and others. They will invest this money. They will invest this money in. Respective companies. Now once they will invest this money in the respective companies, so example, if Sequoia Capital will invest the money in Uber, assuming for example, if they invest the money in Uber, do you think that they have a maturity profile of 1 month, 2 months? No, they might have a maturity profile of several years. So in case of hedge funds, the gestation period is very low, but risk is very high. In case of private equity, the gestation period is very high, but the risk is very low. Sometimes it is risky also. Example, in Indian context, if we talk about majority of the startups being winded up now, and it's a direct loss to a venture capitalist. Take a case of SoftBank. SoftBank, which is a private equity player, SoftBank, invested closer to $1 billion, lost more than 1.5, 1.6, I think 1.8, I'm not sure, taking an indemnification of that number. but I'm sure this is greater than $1 billion which they lost in the Indian startups, right? So investment in private equity is not risk free, so you need to be sure that which company you are investing. Now another thing is the commodities. Now we have seen that where we are shooting this video and where Treasury Consulting is having the principal office, which is Singapore, is that there are a lot of commodity desks are being setting up in this country now. Now what is happening that I am getting this notice that lot of people, those who have the money, they are starting investing in the commodities desk and they want the profit. But they're forgetting that the gestation period here is very low, but the risk might be more than the hedge funds. Let's take an example of LNG, CNG, oil. One statement from any political party, any minister, any institution, anyone, it might end up the wipeout of the entire capital by that. Another place where people are investing is the PTF, proprietary trading funds. Proprietary trading funds is another area where it's another gray area where most of the people still do not know exactly what they are doing. Without quoting the name, I don't want you to quote the name, but we have a firm in the US. If you visit their website, you will get to know that they cannot be a proprietary trading firm, but boss, they actually are. And more than 600 people on the board and more than $30 million of a net profit per year. And apart from that, they invest huge money in infrastructure, real estate and related products. You know that one of the basic issues which we have in case of infrastructure is the gestation period. The gestation period in infrastructure is very high. So if you invest in any infrastructure project, so forget you need to wait for 10 odd years to make the money. And it might possible that several years you end up in the losses also. But there is one issue which is happening in the alternative in the last several years, which is that alternatives have started making a stable income. So the alpha factor is winding up nowadays. Alpha factor is winding up. Let's take an example. Let us take few top available options for alternatives like commodities, hedge funds and private equity. Don't talk distressed capital now. If you talk these three, commodities, hedge funds and private equity, you would have get to know that they all ending up in a loss. If you recently see that, without quoting the name of a private equity player, they quitted from several top companies where they did invested in the US. I hope you got a guess to whom I'm talking it about. Now the moral of the story is that if the alternatives will start giving low income or passive income, then where the money would be heading? So there is an issue with alternative also, but yes, one of the good things which we have in the alternative is that the basket of the alternative is very big. It's not small. We do not have few apples in the basket. We have banana, mangoes and different kind of fruits in the basket. So the choice is very wide. Another fruit which wanted to join this basket is crypto. But unfortunately this fruit is being rejected because regulators are not in sync. Like my tour is coming to an end now after 2-3 days in Singapore. What is happening that I met several people from crypto and they said that we went to this sovereign wealth fund, we went to this government, this regulator, and we want they to invest in our tokens, our ICO, our STO and others. I'm not here saying that ICO is not a fraud, I'm not here saying that the tokens is not a fraud, I'm not here justifying anyone here. As simple as that. This is not my job. But due to some regulatory or technical or functional capability issues, most of the times they're being rejected. They said, no, sorry, we are not interested in your product. This will lead to dry in the funding. And those who did invest it, they burned their hand a lot. I know few people, those who invested in the Bitcoin, and when it was closer to the 18,000 odd, few sovereign wealth fund I know, and today it is 4,000. So they not burnt their hand, I think they burnt themselves completely. It's just 25% of the value. And I don't know how many years, maybe, may not be, Bitcoin will take to reach to that level. The moral of the story is alternatives are rising, there is no doubt. Fund managers, pension fund, reinsurers, sovereign wealth fund, big trust, depository institutions, they left with no option but to go with the alternatives because the conventional products is not generating the enough yield. Last but not the least, the choice of alternative is always an issue. You do not know how to select alternatives. And very important thing which we have is that alternative investment desks are very minimal in nature. Most of the people do not know how to invest in alternatives, which strategy to use, why not to use, and so on and so forth. Another important thing which we have in the alternative is the regulatory. Different regulators have different interpretation of alternatives. So Monetary Authority of Singapore might have different interpretation as Swiss National Bank. Swiss National Bank might have different interpretation than Bank of England. All three interpretations matter. So alternative is not an easy cake which you cut and eat. It's a very difficult cake. But overall, to sum up this long video, alternatives are here to stay. And I might not be very discouraged. I might not be surprised from the fact that few years down the line, more than 25 to 30% of the corpus, it could be AUM, asset under management, might be in the alternatives. One important thing which last I would like to point out is that, which I'm not sure how many people know or not. Without quoting the name, we know that there is one more forum which we have in the market who is really shy, but doesn't mean they don't have the money, which is custodians. Now what's happening that like State Street, BNY Mellon, BNP Paribas, DBS, Citi, you just name that. Generally custodians are two types, bank custodians and non-bank custodians. So these both bank and non-bank custodians, they are now started looking at the alternatives. Because I'm not here to give a lecture how exactly a custodian works, but if you know how a custodian works, sometimes they have the client money, sometimes they have their own money. So in either of the case, they invest their money in the conventional instrument. But recently we saw that custodians have also started investing in the alternative, which is a good thing. That I might not be surprised that there might be change in the philosophy of custodians few years down the line, and they would give closer to 40% to the alternatives. Overall, to sum up this video, alternatives is the future. Pension funds, sovereign wealth fund, reinsurers, depository institution, custodians, they are moving in the right direction. They know that conventional instrument might not be able to serve the purpose, they have to go to custodian, they have to go to alternative. However, while going to alternatives, please be careful. Regulatory, always an issue, it's not an easy job. Last but not the least, Treasury Consulting having a good capability in alternative. We already having an alternative investment desk, AIA. We are expanding this desk. 2019 would be a wonderful year for us. We are launching so many things in this country, Singapore. Hopefully, we'll meet soon again with our discussion on alternatives. In case you have any query, my number 919899242978. My email ID is rahul.magan@treasuryconsulting.in. Don't forget to visit our fixed income platform www.fixedincome.global. Thank you and have a great time.